Facebook, good morning. What we're going to be covering today, we're going to be answering the question that I get asked a lot. And that question is Forex trading gambling? And as I said, I hear this a lot, and I think this is a really, really important question to answer. Now, on the face of it, it seems like quite a basic one, because really simply, we're not getting into the detail of technical analysis. And if you're already a trader and you're already pursuing trading, then the idea that it's gambling, you've probably worked that out that it's not. But the reason it's such an important question is because it covers two areas. The first one that it covers is people coming into trading and wanting to learn it, but possibly not going ahead and doing it, is because they hear from people who aren't necessarily successful saying, oh, it's just gambling, it's just wasting your money, it's dangerous, it's risky. And as a result, they don't then pursue it. And that's the challenge, is if it's something you want to do and you're not pursuing it, you're basing your decision on somebody's opinion, and you may not know the background behind them. But also, it addresses a couple of key points that traders who've been trading a little while it's good for them to actually go back and revisit those. So for me, is Forex trading gambling is really a question that is almost too narrow. You want to broad it out and say, is trading itself gambling? Now, my belief is that trading isn't gambling. Why? Because I've got the proof to show you that it isn't gambling. But for a lot of people who actually do it, they pursue trading, or specifically Forex trading, with a gambler's mindset or a gambler's process. So the trouble is a lot of people come into trading, and what will happen is they'll want to do it, and they'll see a post on somebody's Facebook, or they'll see a comment next to an advert, and somebody will be selling a program, selling a course, and that is what it is. And somebody will say, don't do this, it's gambling, or it's proven not to work. Well, all you've got to do is go and look at a broker, because if you go and look at a broker, what you will see is it will say and tell you how many of their traders are making money. So the challenge is a lot of traders are losing money, and part of that reason is because they have a gambler's approach to it. So is trading risky is the wrong question. What the question you should be asking is, what amount of risk does it actually carry? Because then you're able to come up with a process to be able to do it. Because to me, when people say to me, is trading risky? My answer will be no, trading's not risky, but the person and the process can be. So they're the two factors that you have to bear in mind. So if you want to mitigate your risk as a trader and not eliminate risk, because there is some risk to trading, of course there is, but to mitigate that risk, you've got to focus on two things. You've got to focus on you as the person and how disciplined you are, and you've got to focus on your process. So the challenge is, I can be working with a trader and I'll often get the call or get the email when the trader isn't doing or isn't achieving what they want to achieve, or they're having a losing run, or they're not in a position where they want to be. So the first thing I'll look at is I will look at whether or not it's them, it's their process, or is it a combination of the two? Because you can have a trader who has got a really good process, a really profitable strategy, but when the strategy goes through a winning run, they lose their mind, they start risking too much, they get overconfident, or vice versa. When the strategy is on a losing run, what happens is they become tight, they tighten up, they miss trades, they start going against their process, or they hit a losing run and they're what's known as revenge trades. So they start risking twice as much on the next trade to make the losses back. That trade loses, so they double up again. And what they end up doing is they end up losing more and more and more. So the process, if they were able to follow it, is fine, but the current situation is causing the person to do things that they know is wrong and they know is gambling, but they do it anyway because they're consumed by fear, consumed by greed. So you have a scenario like that where it's the person that's the issue. Or what you might have is you might have somebody that's very disciplined by nature. They're following their process, but the challenge is their lack of knowledge. So rather than a mindset issue, what you're actually got is you've got a skill set issue. Their actual process, without them knowing, is setting them up for failure. So they might be very disciplined, but they might be following some martingale system that means they're doubling up every time they have a loser. And it looks logical and it looks good on paper, but in fact, that process is completely flawed and is eventually going to mean they lose money. So that person is being very disciplined and following their process, but their process is flawed. So the reason trading can end up being gambling is you've got somebody who's got the right skill set but the wrong mindset, or they've got the wrong mindset, they've got the wrong mindset but the right skill set. So both scenarios cause the issue. So as a trader, you've got to be right as the person, and you've got to have the right process. And when pressure is applied, and this is so important, when pressure is applied, i.e. you're having a winning run, you're having a losing run, or it's been a couple of weeks where you haven't actually had a trade, when that happens and that pressure is applied, that's when the potential for you to end up gambling, not following your process, not following or going against what it is you've said you do, that's when the issue comes along. So inherently, Forex trading is not gambling if the person is disciplined and they're following the process. But what they have to do as a trader is when pressure is applied, can they stick to that? Because that's when the issues can occur. I've seen it simply where a trader hasn't had a trade for a couple of weeks, and as a result of not having a trade for a couple of weeks, they start shifting their process, they start getting itchy, they start getting antsy, and they place trades that they normally wouldn't. And as soon as they do that, they move away from being a professional trader and having the right process and mindset over into the gambling territory. So Forex trading itself is not gambling, but traders can move into that area if they are not following their process and not working on their mindset. So they must be wary of the pressure that is applied in different ways, and that pressure comes in different forms. So how do you work that? Well, what can you actually do to eliminate as much risk as possible? Well, I could spend hours going through that, but the number one thing would be to manage your risk and have a very clear risk management process. So for example, a lot of traders have got a fairly decent strategy that they're running. It might be in the 60-70% win-loss ratio, but they're risking 5 or 6% per trade. So straight away, they're in the gambling area. They've moved across to the wrong side of the coin. So the key thing is to have a maximum level of risk that you're going to be at. So for example, we say to traders as a blanket rule, risk no more than 1%. So we have different strategies. One of our position-based strategies, you actually risk 2.5% per trade. So that sounds like that we are, pushing it and we're breaking our rules. But the reason why we risk 2.5% on that strategy is very simply because we only trade that strategy 12 times a year. So that strategy has a low trade frequency, so we are able, based on the data that we have, to risk slightly more per trade. But as a day trader, you might be placing 2 or 3, 4 or 5 trades a day, so risking 2.5% is too much. So it's important that your risk level is capped. And where I see traders go wrong, and it's very subtle, is they might be ticking along nicely, risking 1% per trade, regardless of the result, and then they hit a losing run, and suddenly they're risking 2, 3, or even 4% a trade to try and make back their losses really quickly. And the most dangerous phrase in trading, I say this all the time, is just this once. And any of the traders that are watching or listening to this, I'm sure you've had a situation where you've gone, just this once, I'll do this. I won't do it again, just this once, I'll double up on my risk once this trade wins. Because what traders will do is they will convince themselves that something is going to happen. And as soon as you do that, you're moving into that gambling arena because you do not know what is going to happen. And this can happen to convince yourself to do something you wouldn't, or it can happen when you're on a winning run because you start to think that you somehow know what is going to happen next. And the challenge with that is you start doing things that you shouldn't do. So ultimately, to summarize, trading itself or Forex trading itself is not gambling. Does it carry an element of risk? Yes. Do you want it to carry an element of risk? Yes, because then there is the potential for reward. But what you should be asking yourself as a trader, or working with a trader who understands this, is clearly making sure how you mitigate that risk as much as you possibly can. Right, that's all I got for you today. I'll be back again soon.